You're listening to Indications by the Conference Board.
Hello, welcome to Indications. I'm Elizabeth Crowfoot, Senior Economist at the Conference Board. You're listening to the U.S. Labor Market Roundup, our monthly podcast series where we break down the monthly U.S. Bureau of Labor Statistics jobs report and identify key trends in the U.S. job market that business leaders should know about. Today, I'll be discussing the November jobs report with my two regular guests and colleagues. First, Gad Lebanon, our resident expert on U.S. labor markets and head of our Labor Markets Institute. He is also a regular contributor in Forbes. I'm also joined by Frank Steemers, economist at the Conference Board, focusing on U.S. and global labor markets. Gad and Frank, thank you again for being on today.
Yeah, hey, Elizabeth.
Thank you.
Okay, let's get right to it then. So to be completely honest about it, this latest jobs report was a bit of a shocker. The U.S. employers added only 245,000 jobs in November, and the unemployment rate ticked down slightly from 6.9% to 6.7%. The pace of job gains is a huge slowdown from the pace of over 500,000 jobs that we added in September and October, and over 1 million jobs in the months prior after our initial recovery from the lockdowns in May. And nearly half of the total jobs that we added were among couriers and messengers, so delivery services, and warehousing and storage. And these are the sectors that have benefited most from the online shopping boom. On the other hand, aside from the government sector, which lost nearly 100,000 jobs, other job losses were concentrated in brick and mortar retail stores, especially general merchandise stores, again highlighting that shift to e-commerce. Employment in restaurants and bars also declined for the first time in 6 months, likely reflecting rising cases of COVID-19 and business restrictions that are ramping up again across the country. So on top of all of these job losses, the labor force participation rate declined and is still nearly 2 full percentage points below pre-pandemic levels. So fewer people in November were actively looking for jobs than in the previous month. However, the participation rate for Blacks increased for the second month in a row, while their unemployment rate declined 0.5 percentage point to 10.3%. Still the only racial group with double-digit unemployment rates, but reflecting that more Blacks are looking for and finding jobs. And finally, the number of persons on temporary layoff continued to fall, while the number of permanent layoffs rose, reversing its course from the previous month. Ultimately, we're seeing a mass slowdown in job gains and a reconfiguration of the labor market, both in terms of who's looking for work, who's able to find it, and the types of jobs that are available. And it's starting to look like many of those jobs lost may not come back anytime soon, at least before full deployment of a COVID-19 vaccine. So with that set up, let's go ahead and turn to our labor market experts. Frank, I'm going to turn to you first. We're now arguably at the worst phase of this pandemic, with cases and the number of deaths rising to new records. We also have various government stimulus measures that are about to expire at the end of December, including unemployment insurance benefits for millions of workers. Even with the unemployment rate edging down, what do slowing job gains mean for the health of the labor market over the next couple of months?
Yeah, thank you, Elizabeth. I think it is clear that the trend in employment growth that has been slowing down over the last couple of months. I think it was still positive that it was a job gain this month. But going forward and with states implementing more restrictions, I don't think that we should be very surprised if perhaps already next month there might actually be a small job loss, especially considering that for the job report, the data is always collected in the first half of the month. So if anything has happened is that since early November, restrictions have gone up across states and businesses have had more difficulties to grow and hence hire more workers. So looking forward, if we're going to have perhaps even some job losses, that is also going to mean that the unemployment rate might go up. And labor force participation could even go further down as perhaps some people decide to drop entirely out of the labor market as they don't see any benefit anymore in actively looking for a job. Um, I think it is also important then to point out if we're going to have a job loss, that we're likely going to see similar trends as early in the pandemic. So think of March and April, and that not everybody is going to be impacted in the same way. So think again about those industries most affected. So restaurants, travel, accommodation, out of home entertainment. So especially workers in these industries will likely also be at most risk of losing their jobs. So that are the young people, those with lower educational attainment, and we also see larger shares of Black and Hispanic workers work in these types of occupations. So I think as long as these restrictions across states stay in place or even get stricter over the next couple of months, I think it is going to be a tough winter for many people in the labor market.
Right. And I did mention at the top of the show here that we had only 245,000 job gains. And just to put that in context, those were the job gains, on average, we saw about that level in the second half of 2019. And it's relatively a strong number. But when you look at it in context of this economic recovery and labor market recovery more specifically, it is very disappointing. And if we were to continue at this same job pace in terms of recovery, we wouldn't get to the same pre-COVID employment levels until 2024. So it's definitely a disappointing show in terms of employment gains. And like you said, it has really negative consequences for, those are the type of people that are gaining those jobs back, right? And how that is being distributed across the economy. So, Gad, if I can turn to you now, Frank gave us this glass half empty outlook on the labor market here. If we take into account the recent good news about the potential quick deployment of a vaccine, how does that change the labor market outlook? Is there a glass half full perspective?
Yeah, I think those definitely is. It's gonna be a strange year. It's gonna 2021 is, as Frank mentioned, is gonna start with a whimper, but it will end with a bang. You know, if you read some of the commentary on how fast vaccination will be deployed, one organization that tried to do it is Goldman Sachs, and they, according to their calculation, by April already half of the population in the US will be vaccinated, and that on top of the number who are already that got COVID and are naturally vaccinated. So that means that soon after that the pandemic will be over. I think in the most likely scenario, the second half of 2021, a lot or even all of the um, hardest hit industries like travel and hotels and indoor restaurants and out of the home entertainment, all of those consumption categories are going to make a strong recovery. From a labor market perspective, those industries are very labor intensive, so we'll see a lot of jobs coming back. Um, and the economy as a whole will see a strong recovery. I think the recovery will be especially strong for minorities, less educated workers, and women, because those are the groups that suffered the most when the pandemic started, because they were concentrated more than other groups in the hardest hit industries. So we will see a stronger recovery in those for those groups. I think that the recovery in the unemployment rate may be even more impressive than the recovery in job growth, because at the same time that we're seeing strong job growth, the labor force is the long run trend of labor force growth is very negative. In fact, the working age population in the US is probably shrinking, and shrinking rapidly for people without a BA. So that means the combination of strong job growth and weak labor force growth means that the unemployment rate is likely to recover. Um, and of course, what's standing behind this is the massive retirement of baby boomers. There's still a gigantic cohort, and many of them are at the age of that are retirement age. So that's why the labor force is going to grow so slowly or even shrink. The retirement numbers are even further enhanced by the strong increase in stock and home prices. So one of the things that prevented older workers in retiring during and after the financial crisis in 08, 09, and in the years after that was that they lost a lot of their wealth and they became much less financially prepared for retirement. But in the current episode, home prices and stock prices just kept growing and even accelerated. So more people are financially prepared for retirement now. So beyond those trends, I think one of the main things that we're going to look for and wait to see the trends are what's happening with remote work. So as offices will reopen, we will see how many people are going back to the office and how many are staying at home, working remotely. Um, we expect many to go to the office, but we also expect that the remote work rates are going to be well above pre-recession rates. And but how much is yet to be known. So that is probably the biggest legacy of the pandemic, the economic legacy. And this could have far-reaching implications if companies are willing to hire remote workers. Then we may also see geographic shifts as people are hired anywhere in the U.S., and that means that the geographic distribution across the country could face significant changes in the next decade.
Yeah, those are potentially some things to look forward to, right? The decreasing of the unemployment rate throughout next year as more of the population becomes vaccinated, and also more flexibility, as you've highlighted, that lasting legacy of remote work. I think the combination of those two is definitely something to look forward to, in more of a glasses half full perspective. So I think we will go ahead and wrap things up there for today. I've been speaking with Gad Lebanon and Frank Steemers about the main insights from the November jobs report. Gad and Frank, thanks again for joining me.
Thank you, Elizabeth.
Yeah, thank you, Elizabeth.
And thanks to all of you for listening. Please join us in the new year for the next U.S. labor markets roundup, where we'll be discussing the December jobs report. Don't forget to subscribe to Indications and other podcast series from the Conference Board through your favorite podcast app. Thanks again for listening. I'm Elizabeth Crowfoot with the Conference Board.
This has been Indications from the Conference Board.